Hello, and welcome to the City Street Finance Report. We will be looking at the beginning balance tab and entering expenses and revenues. Let's get started. Beginning balance has its own page. The beginning balance is the ending balance from last year's report. Look at it. This should be the way that last year's report ended for you. You may have a whole bunch of zeros. You may have balance in every column, some of the columns. Each one is definitely different just because each city is handling their funds differently. Some of you are holding funds to make a future purchase. I would suspect that they are building up money in this general fund to make some kind of capital purchase, maybe some kind of equipment for the roads. But remember, all of these balances should be road related. If that money could be used for something else, then it is not a road specific balance and it shouldn't be in there. In this case, they also had a capital project that went over the previous year. They will be transferring more money for just happened to fall after the end of the close of the year. So they really do have a negative balance, and that's okay as well. If when you run your general ledger balances, your general ledger has a different number than what's on this report, you will be able to amend those. It's as simple as just putting them in. So if the general fund balance was right, we're going to say that that one is right. So I'm going to say, nope, there's no change to that. That is 174,746. But the road use balance was wrong. The road use balance should be 212,237. So it's a $200 adjustment. The other special revenues is a zero. Capital projects, yep, that little guy was correct as well. And utilities still didn't have anything. So it'll tell you the amount adjusted. So it's doing the math for you. You don't have to do the math to figure out how much adjustment to make. If you make the mistake of saying, oh, I don't need any adjustment, I need zero adjustment, and you put in a zero, all of a sudden it's going to make that whole balance be zero. So in other words, I just adjusted $6,750. So be careful with that. I do find that a lot of cities have zero in their general fund because they don't have any guaranteed money going towards streets. You may have $20,000 budgeted in general fund, but it doesn't guarantee me that you're going to spend it. So I do see a lot of zeros in general fund. If you have a number in general fund, I will probably ask you at some point in time, if we're talking about your report, what it goes to. You know, I would expect this. I said, hey, you have $174,000 in general fund. Is that a street related balance? And their answer should be either no, which means we take it out and put it to zero, or yes, we were saving money towards purchasing a new dump truck. And once we get to $200,000, we're going to spend it. So if there's a balance in there, you should know what it's there for. And I would say the same thing about the special revenues other. Those balances tend to be linked to local option quite often, especially those of you who have a local option that says 50% will be spent on streets. So you're building a balance, you would know that those are local option dollars. If your local option says for general relief of property taxes, that means you can spend it on anything. I don't expect to see those dollars show up until you spend them, and then you'll need to add them as revenue so that you have the dollars there to cover your expenses. If you need to enter any adjustment at all, you do have to fill out every column. Once that line becomes active, it has to have something in every square. So if you use that, you need to hit update. If there's nothing to change on there, you don't have to hit update. You can just look at it. It's good. You can skip on to the next page. You do want to look for these markers that say save successfully. Every once in a while, somebody will lose their internet connection and think that they're saving things and then find out when they get to their summary page that nothing's saved. That's because of an internet problem. So make sure that it's telling you that it saves successfully. Expenses. Everything is in here by fund column. Special revenues is split between road use and then everything else that would be in special revenues. Other than that, we have debt service, capital projects, and utilities. The white boxes are open for anything. Most of you are using some kind of software to do your fund accounting. G-Works does a pretty good report to be able to fill out this street finance report. Otherwise, you're just running a revenue and expense report and balance reports so that you can put in your beginning balance, your expenses, your revenues, and check your ending balance. You should be able to go through. This follows the chart of accounts, line by line. They're in order. Salaries, benefits, trainings. The white boxes are open for anything you want to put in them. The yellow boxes just are trying to make sure that you're in the right place because they're a little bit unusual to be used for that. So they're going to pop up a warning and ask you if you're in the right place. If you're sure that, yes, you're in the right place, you absolutely can enter things there. If the box is gray, you cannot make entry in that box. However, if you're convinced that what you need to have from your general ledger really does go in that box, send me a quick email with it and I can put it into any of the gray boxes. So you'll want to go through your list of expenses and put them in. So all salaries get added together. If all of your salaries came out of the road use column, then just put it in road use. If you had some salaries that were paid for that were street related, that were from general fund, then by all means add those in as well. Benefits. If you're levying for benefits, obviously those are going to go in special revenue other. So we're going to put in some benefit dollars over here like they were levied and on down the line. You're just going to fill it out exactly the way it falls for the chart of accounts. If you're a really small city and you're not using the chart of account numbers, feel free to just match up the definitions as best you can. You will notice that streetlights show up in two places. That is because they show up in two places in the chart of accounts. They show up as a line under the regular streets, and they show up down toward the bottom as a department. They only need to be in the report once, and I don't care which place they are, whichever makes more sense with the way you're doing your bookkeeping. They're just purely in there twice because the chart of accounts has them listed that way. So you're going to put those in. We'll put in some streetlight expense. Other maintenance and repair, that gets used a lot for street repairs. So maybe they did some kind of small project, so it was under capital projects. Maybe it had some engineering to it. Maybe you had a payment to another agency. Maybe you had the next city come over and do some work with their road grader. Small cities, don't be surprised when you only have 3 or 4 lines filled out on this big long page. That's fine. That's totally normal. Big cities are going to have a whole bunch of these, more than half of these filled in. Maybe we had minor equipment purchases. Maybe we bought some kind of trailer. This one is kind of an oddball, so I pointed out. This is the federal government's report. Very specifically on that report that I fill out, it asks me about new signs and posts, so new stop signs, new stoplights, versus replacement posts and signs. And the reason it's asking me is because they are taking those new signposts. So if you went from a yield sign to a stop, or you put in a stop sign for the first time, or you added a street light somewhere that had never been, they're using that as an indicator of growth. All of a sudden you have more traffic, and so it needed an upgraded sign. And that's why they're looking at those separately. I know that that one is hard when we're keying in the expense for that, because quite often if we're buying stop signs, we're buying them in bundles of 10 or bundles of 100 or whatever you're buying them in. This is one where I just kind of ask you to take your best guess. You should have a pretty good feeling for, I feel like, 9 out of 10 of those are replacement and maybe one of them's new. Or I know we did a big development, so we probably put in 30 new ones. It's not going to be exact, and that's okay. I don't expect you to go back and try to track all of those individually. It's not worth that time. But just take your best guess between those so that they have some indicator of whether you have growth going on in your roads. Capital outlay, we get a lot of these. This is where we're building new roads. We're buying big equipment. So maybe we're going to put in, maybe we have a new roadway that went in. Usually that's under capital projects. We're going to make that a big $500,000 project. So capital outlay, you have lots of options for streets, new roadways, capacity improvements, preservation. So that ends up being your maintenance projects quite often. Sometimes those get put under preservation. So maybe it was a $75,000 chip seal coating for one little section of road. And then debt service. So debt service is always going to throw an error for you until you get both the expense page done and the bond page done. So if I put in my payments right now, it's going to say, hey, the bond page doesn't know anything. You need to go do it. So you're going to have an error until you get both of those pages done, and that's okay. So you can go ahead and put those in. Most people, I think, at this point do the bond page first and then come back and do their bond part of the expense page. And we can look at that here when we get to the bonds in a minute. But I think that makes sense to at least go back and double check. These other departments at the bottom, again, this is part of the way the chart of accounts is set out. So if you have street lighting as a separate department, as a 230 department, you'd put it in down here. Snow removal is one that the federal report specifically asks for. It's also one where I think, now that I've kind of got the attention of some people in the DOT, that the better information I have on what we're spending on snow removal, maybe we have some ability in the future, if we get some FEMA dollars, to maybe do some sharing like we did with the COVID dollars. So the better information we can get on snow, the better off we all are, especially since the federal report requires it anyway. If you're a city that is not separately tracking snow removal, please make a plan to do so as soon as it makes sense. I realize you've already got your budget set for this year and you're working off of an existing budget, so you probably don't want to do it now, but maybe when you set up your budget in the spring, it would be something to put in. I do have some cities that purely take the amount of money that Public Works spends in November, December, January, maybe February too, 4 months, and takes those expenses and calls those snow, and they call the other 8 months streets. That's okay too. I have some that assign a percentage to snow after the year gets done. Whatever works for your system is okay. I personally think the easiest thing to do is to go ahead and set up the 250 accounts. But if that's not something that you want to do, there's other ways to do it too. If you don't put in anything for snow removal, it's going to remind you on the last page that this is Iowa, and I really do expect you to have something for snow removal. We do have a few small towns that get away with not paying for snow removal because the county does it for them, or they have a landscape service who lives in town that does it on their way out. There's a few really lucky cities, but the majority of you are not in that boat. Street cleaning, if you have any street cleaning to put in, then you track it separately. It's down here as well. You'll get down to the bottom and you'll have a subtotal of all of your expenses. And then you'll have the ability to put in transfers out. So this is transfers out of street dollars only. If you transferred money out of local option sales tax, so that would be a special revenue other. If you transferred $100,000 out of local option sales tax and $60,000 went toward a capital project for streets and the other $40,000 goes toward the library, then the only thing that ends up on this report is the $60,000 that is street related dollars. So even though the $100,000 really was the amount of the transfer, $60,000 is the street dollars of it. That's what makes this report a little more tricky. You just have to pull the street pieces out. You can transfer out of road use. Previously, that has been a kind of a big no-no. Some of you have been doing it anyway. If you want to transfer out of road use, to put it in capital projects so that you can do your capital project and have all of the elements there, all of your grant dollars, all your utility dollars, everything all in one place, you absolutely can transfer it out. Just make sure that your street expenses are the same amount as what you transferred out of road use, if not more, so that you don't have any road use dollars going toward a non-street expense. If you have transfers out, go ahead and put them in. It's going to give you a total for all expenses on the bottom line. Make sure you hit save after you go through all that work. Make sure you get your little save successfully, and then you can move on to revenues. Revenues is set up the same way, following the chart of accounts, following the columns for the funds. The very first thing you come to is a little box with auto calculate functions in it. If you don't want it to do calculations for you, you can turn any or all of them off and put in numbers from scratch no matter what. If you want to pick and choose, you certainly can. And we'll go through what each one of them does here, but they're trying to make your life easier. For the general fund, any dollars spent out of the general fund, it is going to pull the exact same number of property tax dollars as what you spent on the expense page, making the assumption that Whatever you spent, obviously you had to have revenue to cover, and you're not trying to build a balance and you're not trying to spend a balance. So therefore it's going to say, okay, I pulled just the tax dollars I need. Those were your street related tax dollars. Any other dollars that you put in this column. So if I say, oh, well, we sold permits for golf carts on the streets and we give that money to street related projects, and we sold $200 worth, it's going to reduce the levied on property by that same amount. So if it ends up being 231, it would take it down to an even 5,000. So anything you put in is going to automatically calculate that levied on property and take it down to zero. If you want it to spend balance, so the city had a big balance, had $174,000. We said, nope, we don't want to pull any new tax dollars. We want you to spend what there is. Then we're going to turn it off and say, I want $0, spend what I already have banked up. So that is the way that the general fund column works. That is exactly the same that the charges for fees and service for the utility column works. Any expenses that you had in the utility column, it says you had a water main break. You had to repair the street because of the water main break. So there's a street element to that repair. Maybe there was $6,000 worth of repatching that street. So utilities should pay for that. And had I spent that $6,000, then I would see $6,000 pop up in charges for fees and service because that's the revenue stream for utilities. If I didn't want it to be there, I could certainly turn it off as well. The other two that are automatic, one is in the levied on property for other special revenues. That one is very specifically tied to your benefit line on the expense page. So back here on expenses, we had this box right here, other special revenues, benefits. Revenues are going to be added to match that benefits box, making the assumption that if it's in that line, in that spot, you are levying for benefits and you need at least those property tax dollars to cover it. Lots of people missed that revenue stream and ended up upside down in that column. So I went ahead and added an automatic box for it. If you don't want it, don't like it, don't need it, you can always turn it off. The last one that automatically fills in is levied on property for debt service. So back here on the expense page, I put in, down here at the very, very bottom, I put in under debt service that I made a principal payment, an interest payment, and a bond paying agent fee for one or more bonds that we're going to deal with on the bond page. And because I put them in the debt service column, I am making the assumption that it's a general obligation bond and it's being covered by property tax dollars. So it's going to automatically throw in what you need in property tax dollars to cover that payment. Now, if I took some local option sales tax dollars and threw it in there to help make that payment, maybe it's paying the paying agent fee for some reason, it's going to reduce those, just like the first column does and the last column does. So it's going to reduce until it's paid by some other source. Throwing that in there because, again, it seems like a lot of people were missing putting in their property tax collected to be able to fund their payments. So those are all the automatic boxes. Feel free to turn them on and off as you choose. Other than that, you're going to go through and put in whatever dollars that you needed. We said that we had a local option sales tax transfer. We transferred out $60,000. We certainly need at least that $60,000 to be able to spend it and move it. So we need to make sure it ends up in there. We may have had federal grants. When you get a federal grant, sometimes it's for a project. So maybe we did $575,000 worth of federal grant for some kind of project. The state revenue, so this is the payments that you receive on the third Tuesday. For cities under 500, it's the third Friday of every month. Payments are going to automatically populate for you, and this is not a changeable box. Those payments are directly tied to the report that we get from the treasurer's office. So if this number does not match up for you, you're going to go up to the payments tab, look at the monthly payments, and double check each month and make sure that each month matches up. You can print these if you want. They're not going to automatically print with the rest of the report, But if there's a reason that you want to print out these 12 payments, you certainly can do so. So double check those. Most often, it's local option sales tax that gets put in swapped with road use. So that number for road use revenue is in there. It is the only thing that can be put on this line. So if you're using the chart of accounts, the 4430, those 12 payments are the only thing that goes there because they have to be kept separately. I will allow you with the new report form to enter revenues into the road use fund. If you have a road use CD that is accruing interest, often that interest is just being tacked onto that CD so that that CD continues to grow and balance. If you need to put that interest into the road use fund because it's a road use CD, you can go ahead and put that interest in. Anything else that you need to put in? Maybe you got the small sign replacement grant. So one of those links in the back of the book, if you download the book, is the grant program for the sign replacement. If you need to go through and replace signs that have lost their reflectivity, could be stop signs, yield signs. These are like the emergency signs, the directional signs. They are not named signs or street names or any of that. But if you apply to the DOT for that and you buy a bunch of signs and then get reimbursed by the DOT for that, so that's a state grant, maybe that's a $12,000 grant. If you want to run that all in road use because it's a road related expense, you certainly could buy them out of there and then put the money back in to make it solvent again. For those of you cities that are under 500 and you have money coming back in from farm to market from the county, those dollars go in this line called local contributions, county and city. You used to have to put them, at least you were supposed to put them, in the general fund, and you were supposed to track them separately, and you were supposed to apply the road use rules to them that said you will only spend them on road related items and you will protect them against being spent for library books and cemetery mowing. Those dollars are better protected in the road use fund and will be used for road purposes if we let you put them back in the road use fund. You can certainly make that change. If you like them in the general fund and you're happy with the way the bookkeeping has been going and you don't want to make that change, that's fine. But if you do want to make that change and you do want to start booking them in the road use fund, you may do that as well. If you're charging anybody for some kind of service, maybe you had to have reimbursements from somebody for damages, you could have all sorts of things. Special assessments, maybe you're collecting a special assessment for putting in a street or paving a street or some kind of project, and you're assessing the neighborhood because you like all the hate mail that brings you. Then you have a line to put those in. This one called contributions, it's actually a multiple things in this line. It's contributions, it's donations, it's casino dollars. There's about 5 or 6 things that are listed in the chart of accounts between those numbers, and they're kind of all a really broad bunch of stuff, including one of them is like refunds from insurance. If we got an insurance refund, we could certainly put that there. Fill this one out, just go down your revenue sheet and put in the numbers as they need to come in. Down here we have proceeds from debt. So if we took out a new bond during the year and we needed to deposit that, usually I see those bonds come in as funds for capital projects. Sometimes that bond is paying off an old bond and being new funds for a new capital project, in which case part of them goes into debt service to pay off the old bond and part of them goes into capital projects for the new one. I've seen them there. Sometimes you're doing your projects in either the general fund or the road use fund. Those are fine as well. Wherever they actually fall in your own general ledger is where you need to put them here in the report. So we had a transfer in, we were moving $60,000 from local option, and we're going to bring it into capital projects to help with one of those street projects so that our transfer should be even. We need to make sure we get that in there too. So we're going to save those. It says save successfully. Once I get through those 2 financial pages, personally, I like to jump to the summary form real quick to see what I potentially have missed. If I feel like these numbers are good numbers, Are the ending balances matching up with what I think the ending balance should be? Do my transfers in and transfers out match so that I'm not going to have an error message? Do I still expect a negative number? All of those things are things that I like to go through and check and make sure that the financials are on. If you have a negative number as a beginning balance and it's getting worse as an ending balance and you haven't talked to me about it, I may send you a note asking about it, or I may just send a note when I approve your report saying, I see your negative balance is increasing. You might want to address that in the next budget year so that you have something at the council that says we really can't just run a negative balance all of the time. So that should wrap up our main financial part of this report, the beginning balance, the expenses, and the revenues. If you need more information, other segments are available on the Street Report website.